Today, we are talking about economic trends that affect car buying.
70% of vehicles are imported. Everything's bought in foreign currency.
There's a growing demand for subscription models. There's a growing demand for flexible models like, for example, rent to own.
New energy vehicles are cool. Anyone who's been in one wants one, that's for sure. I definitely do.
Welcome to WTF, WesBank Talks Finance, the podcast that turns WTF moments into knowledge that you can use to make informed financial decisions. Subscribe to get notifications when we release new episodes. Hi, my name is Lebogang Kawaketse. Welcome to another episode of WesBank Talks Finance. Today, we are talking about economic trends that affect car buying. And in studio today, I've got Imtiaz Kasim, who is the head of growth and integration at WesBank, as well as Brendan Cohen, who is the chairperson of NADA, the National Automobile
Dealer Association.
Welcome to the both of you, gentlemen.
Thank you.
Thanks, Lebo. It's great to be here.
Thank you. Now, economic trends affecting car buying. What are the things out there that we should be mindful of, that we should be aware of? And I'm going to start with you, Brendan. Sure. Inflation, it's quite a thing. How does that impact the consumer's car buying decision or car buying journey?
Well, inflation is an increase in price in things. And as we've been seeing through this long inflation cycle that we've been through, as inflation goes up, your monthly income doesn't go up. And so the pot at which to spend, decreases. So as inflation goes up, it makes it more and more difficult to buy a vehicle. And of course, the vehicles themselves are going up in price too. So it's a really vicious circle that has been going on when inflation's going up.
And Imtiaz, in your space, in the growth and integration space, what are we seeing in as far as, customer affordability, consumer purchasing behavior, that could be impacting their decisions to buy vehicles?
So firstly, I totally agree with Brandon. Inflation has been a talking point, not only in South Africa, but globally. I think it's important for the consumers to understand that central banks use interest rate, as a tool to be able to manage or influence inflation. And so what happens is that in an increasing inflation cycle, what generally happens is interest rates increase. Okay, and they do that. The economic logic for that is purely because they want to curb excessive consumer spending,
for sure,
and of course contain demand for credit.
For sure.
So let's just look at the two scenarios. In a high interest rate scenario, the cost of credit becomes quite expensive. Okay, and the inverse happens when interest rates are low. So effectively, we find that it kind of puts customers under pressure in an increasing interest rate environment, and in a declining interest rate environment. People are still very skeptical. They want to follow the trends to see exactly what's goes happening on before they actually jump into purchases.
But in the space of buying a vehicle, you speak about consumers are skeptical when the cycle is down. What are the things that they should be doing in that cycle to get them closer to an affordability state while waiting, if I can put it that way?
Firstly, I think they've got to assess if they've got the affordability to buy a vehicle.
Okay.
That's the most important thing. And then obviously look at the horizon going forward in terms of whether they'll still continue to be able to afford that vehicle in 4 years' time, 5 years' time, etc. So they look at the finance solutions that's available today, or the structures that's available today, like, for example, longer terms.
Okay.
Traditionally it was 48, 60 months. Now it's 84 and up to 96 months. It's almost like financing a home. They look at that. They look at, balloon payments. Balloon payments, obviously, just an inflated payment at the end that helps to reduce your installment. And some of the discerning buyers or more cautious buyers look at having the balloon guaranteed, the guaranteed future value product that we've got.
For sure.
And so they're trying to keep their monthly costs as low as possible. And I think that's a savvy way to approach your finance, is a long-term view of whether you'd be able to afford it, not just today, but in the future.
For sure. And I mean, we would like them, to keep their costs as manageable as possible
Yeah.
because we want to keep our consumers in their cars for as long as possible.
Yeah.
But there's this factor of vehicle price index. When the vehicle price increases year on year, what is the impact of that, Brendan?
Yeah, I mean, it's massive impact depending on the year and depending on the exchange rate and where we sit with our currency. 70% of vehicles are imported, irrespective of the brand, and everything's bought in foreign currency. So as much as one can hedge their currency, hedge the full inflation, there are shocks. And when there's shocks in the system, it spikes the currency against us always. And that's going to increase prices. And we've seen when vehicle prices increase, it adds more stress to the system. People start either holding on to their cars, buying down, going into the used car market. That's increasing very well. So there's always an option, but there's a lot of stress in the system, and that vehicle price starts it off every time.
So, I mean, and I'm coming back to you because the question is, how much longer as a consumer do I then hold on to my car, before it starts becoming more of an expense than it is really a car that I can hold on to. What do those trends look like? Are customers holding on much longer in these cycles when they're feeling strained, or are we seeing more trade-ins? What is the impact in your space?
Firstly, look, so an increased vehicle price obviously means a higher monthly installments. So customers generally look at cheaper alternative products. And the trend at this point in time is, they're looking at good quality used vehicles. They're looking at quality new vehicles. And fortunately, in today's market, I mean, you've got the Asian brands, you've got the Chinese brands that offer very good quality vehicles, value for money. And this is what the discerning customer is looking for. They're looking for value for money. So what they tend to do is they buy down. So those customers that do not that defer their purchases would, and if they get back into the cycle, they would actually look at these particular types of vehicles in conjunction with ways to be able to optimize your vehicle finance to keep your monthly installments as low as possible.
And I suppose that is the marker, regardless of how many changes of these factors that go into affording a car, the trick is to really try to keep that installment manageable and as low as possible.
100%, yeah.
Now, Brendan, what does this mean then for the dealer? Because whatever happens at the dealership eventually trickles down to our consumers. Supply, demand, I mean, those shifts, what do those look like?
Yeah, I mean, the dealer model lives on people buying the car, new car, used car, and then servicing that vehicle. So if people are holding off on their purchases, if people are scared, if people cannot afford it, that massively affects a dealership negatively. I think if you take a group of dealers, you're seeing we're going much more into the multi-franchising world, so that consumers are given a lot more option, so that they'll go to a traditional brand. Maybe the prices have gone up a little bit higher than they thought. Maybe if they've bought that brand before, but too expensive now when they come back. But next door, there's an Asian model or something like that. All of a sudden, that's much more affordable. It's got all the features, the tech, all of that kind of thing. So I think those are very, very important for a dealer sustainability. As one brand decreases, you've got to have something to fill the gap. If a new car is a little bit pricey, you can bring the customer to the used car lot, see what's on there. If a big car is expensive, get a smaller car. So at least there's options, and that's where the dealers have to become a lot more flexible. And not just in the normal old-fashioned, you like the car, kick the tire, buy the car, but now almost have to become psychologists, and that's helping people through not being able to afford the car, but we have another option. Let's get you into new wheels. And that's the dynamic shift on the dealer.
You spoke about the fact that the consumer has options. Do you maybe just want to take us through a couple of those options that they have in terms of these trends that we're seeing?
Customers are looking for, particularly the younger customers, they're looking for cheaper alternative solutions, flexible alternative vehicle solutions, mobility solutions. So there's there's a growing demand for subscription models. There's a growing demand for flexible models like, for example, rent to own, where it's in fact, short term. It gives you the flexibility. It's short-term rentals. And if the situation changes, they just simply hand the vehicle back and, step back and basically reevaluate themselves so they can get into another cheaper cost. And I think it is prevalent in the market, but the traditional finance, installment sales and leases, are still very popular. But you do find, especially in the Gen Zs and millennials, are looking at these models going forward. And I think one important point is, it's digital first for them. So if you've got the solution on platform, on app, they prefer to be able to acquire their vehicle finance on platform in the comfort of their own home or wherever they are.
And I suppose the leading, thing there is, do I want to own the car, or do I want to merely move around? Because Africans, let's be honest, Africans love their cars because of the convenience. I like what you're saying there in terms of options. Work out what you want, work out options, and then see which route to go.
So previously there was this ownership mentality, and that's slowly starting to shift. In terms of owning the vehicle versus simply pay for usage. Especially, like I said, amongst the younger consumers.
Interesting.
So obviously, banks and financial services would need to obviously make provisions to have those kind of products available for the emerging market.
Interesting. Sure. And then there's electric vehicles in the mix. What does that mean in this sort of environment where one talks about excess from a pricing point of view? There's a whole excitement around electric vehicles. What does this introduction of electric vehicles essentially mean to the consumer in this mix of all of these trends, Brendan?
Yeah, new energy vehicles are cool. And, the big thing is that people have become very commodity-driven, commoditized things. We love our cell phones. We love to see our Apple Watches and all the different things because it's got cool tech. And the EVs come with incredible tech in them. They are at a really, really high level. So people tend towards them. And anyone who's been in an EV, it is a phone on wheels with every form of every cool thing you can imagine, but at a very big premium. And I think that's where the problem that we face before we even get to infrastructure. Infrastructure, if there's demand, infrastructure will follow. The big problem we have is that these are highly luxury vehicles coming in an extreme premium into our country. They're only for the very few. So I think people want them. Anyone who's been in one wants one, that's for sure. I definitely do. But can you have access to it? And we don't have that. We don't have the economies of scale that foreign countries have, where the factories can support the price of the cars, really bring them in at the same price as a petrol or diesel vehicle and get people into mobility. We're just not there.
And I've been in one myself. I certainly would want one, but affording it is the question. I am, though, seeing, Brendan, that there's a couple of sort of brands that are coming in and introducing these electric vehicles at a sort of affordable pricing point. Will that ease it in any instance for consumers? Will it create more access, you think?
It will for those who are convinced they want one already. There are good ones coming in, but still the entry level is still plus 500,000 Rand. So this is not new gen or new market. And that's a big problem. But yes, it will. And then we'll move to the area of, do you have the charger at home because you need one of those when you get to work? It's a whole different lifestyle to run an EV. You don't do what you do with a petrol car, which is when the light comes on, you go, fill your tank. An EV is anywhere you go and there's an open charger, you stop and you charge because you just don't know where the next one is. And so then we move into that whole different world of changing everything. But yeah, the Chinese brands are bringing in the best of the EVs at the best prices. And it will open the market to a whole lot more people who never would have maybe thought about it.
So you want to add to that?
Just to weigh in there. So I think apart from pricing, because price point is a big thing, and it's not that people or consumers do not want to get into the vehicles. It's very expensive. And I think people are also very skeptical about the charging infrastructure. But
Range anxiety is.
But I think the other thing in South Africa particularly is the reliability of energy supply, and I think this is their concern. And I think if we can overcome those concerns, those three factors, we could slowly start to see a migration from ICE vehicles, the internal combustion engine vehicles, to electric vehicles. And I think as banks, we could do a lot more to be able to promote from a consumer ed perspective, number one. And number two, to be able to find creative ways of actually financing these vehicles. Call it green finance, whatever you want to call it. But, just, incorporating some of the principles to reduce monthly installments, whether it's balloon payments, whether it's longer terms, whatever the case might be, just to get customers to experience these vehicles, so that it could sell itself.
Interesting. You want to add to that? Yeah,
just
very interesting topic, this one.
It is, I love it. There's a fourth factor, and it relates back again to the cell phone. A big problem, because technology is moving at such a speed on the EV side, like a cell phone, one of the big things I'm finding overseas is on a phone you get it, but 2 years later, that's old. You want the newest, best one. Now on a phone, you just chuck the old one in the drawer or give it away to somebody. But it's a much different thing with a vehicle. So you're getting this car, but that the car in 2 years' time's battery is going to be 10 times better. The car is going to be cheaper. So do I buy now? Do I buy then? If I do buy now, what's my car going to be worth in 2 years, 3 years, 4 years' time? Because it's going to be old tech. And that's a lot of worry for at least the people who've experienced it in the EU and in the US. Do I get in now, or do I wait for the cooler car when the technology has settled a little bit more?
Very exciting. MTS, you wanted to add?
So what has helped was basically the fact that there are hybrid vehicles that's around.
Okay.
And the fact that, the plug-in hybrid vehicles that's become available now. So if you look at the strategy, it's a slow transition into getting consumers to understand, electric vehicles. So it's like
there's
hybrid,
a couple of
plug-in
options,
hybrid,
yes.
and now it's the full battery electric vehicles. So things like, for example, the angst for the customers are, in fact, charging stations. So if we could be innovative in being able to bundle value propositions from a finance perspective, in terms of not just financing the vehicle, but financing the charging station, the home charging station, that would almost reduce the angst for customers.
For sure. And really improving the infrastructure, to curb things like range anxiety, as you say, to create access points with more sort of affordable vehicles. As you rightly said earlier on, Brendan, that, where there's demand, the consumer will follow. So if the surrounding factors that will enable the ownership and really financing of vehicles, these NEVs, are there, I am comfortable that the demand will follow. Yeah.
Interesting topic.
Great. There you have it. Economic trends that affect the buying and ownership of vehicles. Thank you for your insights. It was really an interesting discussion.
It's a pleasure. Thanks for having us.
Thank you. Thanks for listening. We hope that you found it useful. Now go and subscribe to be notified when our next informative episode is available.